We start today's market talk. We are in a bubble. This is what SEBI chairperson said, and she scared the markets last week by saying that there are pockets of froth in small and mid cap stocks. She asked all AMCs to conduct a stress test on small and mid cap funds to assess the liquidity of portfolio in event of unusual redemption pressure and tell investors the results. It created panic. Nifty small cap index fell around 11% from its peak, but the same index had gone up around 80% in last 1 year. So the frenzy which we have seen is more due to momentum and narrative than fundamentals and earnings. And add FOMO to that, fear of missing out. In my opinion, SEBI chairperson's warning to the markets need to be appreciated because we have seen a lot of regulators also, you know, deviating as per the market's requirements. Some questions I have for discussion. First is, will the markets continue to correct? In my opinion, we have had fantastic 4 years, and there are a lot of excesses in the market. To me, it seems that we are past the peak of the present bull market, and we are already seeing a correction in small caps and mid caps, which have which have run up a lot, and we will see the ripple effect on large caps also. I'll show you this issue technically also. Differences in valuation in India and across the world is significant, and this will lead to some slowing down of the FI's inflows. We are seeing so much enthusiasm right now in option trading, so many IPOs, promoters selling, which clearly brings out that we are in some kind of a euphoric stage. So make your decisions accordingly. Well, I'll just show it to you. This is monthly chart of small cap index. So if you see here, this is from 2006 onwards. 2006 to 2007 was a great rally, and beginning of 2008 when the global financial crisis started. After that, the small cap index corrected. So it corrected nearly 50%. Then again it rose, it reached 2018, and then after 2018, where it had reached the high, it again corrected from nearly 60%. And now, after that, after the COVID thing, it had a rise, it had a small correction in 22, which I was referring to, and now it has had a very steep rise, and now it is showing you signs of big correction. So there are a lot of stories which will be said that they cannot be their good earning support and this and that, but it's a continuous process. It becomes half. Now what happens is when the index becomes half, the stocks correct 60 to 80% of their value. Hence, one has to be careful and be very clear about the company which you are dealing with. Okay. Next, small caps, micro caps, MSMEs, have they peaked? Small caps have corrected around 7% in the last 2 months. Because it had corrected 11% up to Wednesday, but it rose back to 3%. So around 7% in last 2 months. It is at small cap index at 30p. SME index and micro cap index is much higher, and you could see the fraud the way the stock prices were going up. So it seems that it has peaked. Now, when promoters sell their stake, is it the time to be worried? Earning growth, order book outlook, it's very good for some of the stocks, but valuations have become extended because you can't value stocks on order books, you have to value them on earnings. So, what is happening is promoters are busy offloading their stakes. MNCs like Whirlpool, BAT, Timken are offloading their stake and taking their money home. And they are saying that we are finding a clear arbitrage. We will sell the stake here and we will buy back our share in our market, which is at a much lower P. Even think people like Hyundai are planning to list in India, seeing the valuation at which Maruti trades. So clearly, they understand their business much better than us. Now, are we having too much leverage in the system? On Wednesday this week, the broader markets were down probably 4 to 5%. That was due to leverage in the system. So, leverage is in the form of FNO, margin trading, and other system. People are borrowing money right, left, and center, and that is what the regulator is getting after and putting that in the stock market. So, you need to take some chips off the table, then see when you want to re-enter again. And the biggest change is investing apps, which have made transactions so easy, and hence we are seeing detailed participation right now. I found even at one place there was a group of ladies also who are making a WhatsApp group and investing and all that. So nothing wrong in that, but point is that one has to be a little bit careful when everybody is giving stock tips and investing and all that. Now, will the correction be swift or will it play out over a period of time? Why? Because till now we have seen a 1 day, 2 day swift correction and then the market has rebounced. But it may not be, so we may not see a 1 day decline. Please switch off your volumes. Where everything gets corrected, there would be false rallies and much more sell off in stocks which are not in indices. Hence, one has to be careful and not think that every rebound is market has turned and now you can just keep putting money. Are energy transition or narrative stock grossly overvalued? Should you sell the overvalued stocks? Now we had unrealistic expectations from these stocks. Now throughout the world, if you see the electric vehicles, green energy stocks are correcting and they are getting exorbitant valuations in India. So be slightly careful. You can't put your money in a stock which is at 150 P. So that implies that your investment is going to come back after 150 years. So it is gone too far. Should corporate governance be given higher premium? Of course, because we are seeing how the prices are being manipulated uh, by putting money through various means, where there was a Tibberwala case or something like that. And some of the stock prices are being manipulated, and you will not get an exit then. So, will the domestic flow sustain? The regulatory clampdown has drawn attention to the leverage in the market, which is providing the liquidity. But I think the domestic flows will sustain because people have now become interested in stock market. But we have to see this issue because this is the only thing which is presently driving the markets. And a lot of people are telling you that you must move out from small caps, mid caps, and move into large caps. But the conundrum is that some themes like railways, defense are not in large cap space. So these are the important themes. Hence, it is very difficult to just sell everything and move into large caps because they will also get sold by some level. Now, in the US, there is a reason for why tech stocks are doing well because of potential of AI. In India, it is due to the business-friendly government and hope for more reforms, which will facilitate the earning, and that is why uh, there is a enthusiasm in PSUs. So till these favorable conditions continue and the liquidity is there, the sentiment will remain upbeat. So what should we do? Best ideas to navigate volatility is slow down, adjust your portfolio from liquidity perspective. Don't take an exit because mid and small cap funds need a very long term commitment from investors to really get good value. Check the quality of your portfolio, reconfirm your risk tolerance and investment time horizon. Understand whether you should stay or it is best for you to get out now. Otherwise, if you're not clear, you will be slightly in a soup. The point is invest in India's macro story and in companies that show good margins, ROE, and growth, and also excellent managements. Look at these issues and stay invested. Now, coming to technicals, if you see US, there is uncertainty over Fed rate cuts due to increase in US employment rate and higher than expected US inflation. Consequently, the US 10-year yield, if you see here, it has gone above 4.3 levels and has bounced from the 50 EMA. And I'll show you dollar index also. The dollar index has also had a green week and now has gone to around 103 level. And if it moves above the this 2050 MA, then it will go and test the declining trend line. So they have inched higher, the US 10-year yield and dollar index. It is because the Fed is likely to keep the interest rates unchanged. There is going to be a Fed meet, and people will see the commentary in this week, that is on Wednesday. Prediction is of a June rate cut as more data is awaited by them to confirm whether inflation is heading to 2%. Brent crude, again, now if you see, it had a declining trend line and now above 84, it has broken this trend line. It was consolidating in this range for a very long time. This is a weekly chart. So it has closed above the key hurdle of $84 to a barrel after several weeks of consolidation. Price has broken out of downward sloping resistance trend line due to bullish demand and supply deficit. Gold, it has corrected this week because of strength in dollar. So we'll have to see this level to see how it performs over this week. Nasdaq, along with the rest of the world, also had a dip. I think this is basically because of profit booking in all the AI related stocks and Nvidia also. So it corrected, but we'll have to see the level from which it had broken out, if it retests that and if it's able to bounce back from there. India's 10-year yield had a rose again, and we'll have to see. Till now it is trading at below 50 and 100 EMA, so it is still negative. And based on the inflation data and other issues, this will move, but it is not likely to go up much higher from here. India VIX was not very uh, what should say volatile this week. It remained in a range and closed exactly at 20 EMA at 13.6 or 7, and it is still at that range. So I think with the events of elections and all, there would be slightly more volatility. So be careful with this issue of VIX. Now, Nifty, if you see here, uh, this is a weekly chart. It had a negative week, but RSI is still very strong. And if you see the trend line, it is uh, it is still making higher tops and higher bottoms. So till the time this is not changed, the momentum will not change. So the momentum remain positive for Nifty till this higher highs and higher lows trend continues. So this last low, which it made in January of around 21 200 odd, will have to be broken for changing of the this trend. And the last high was around 22 500. So it's always making higher highs. Now this is the daily chart. So if you see here, uh, it took it has been taking last two times support around 50 EMA, that is 21,838. So this is the first level to be watched. If this level goes, then you may see lower levels. But presently it has taken support there after the big fall it had uh, last week on Wednesday. It has made a fresh high of new high of around 22,500 only last week only. From there it corrected. So we'll have to see this. Uh, this is the hourly chart. So if you see here, it was earlier it was taking support at 50 EMA, 50 hour moving average out here. Now once it broke this, it has gone to 200-hour average, and then it is finding resistance at these 20 and 50-hour averages. So first this has to be crossed, then only for short term you can say that there is some strength in this. And the trend though is downwards. It bounced back a bit on 14th, that is Thursday, from slightly oversold levels it had made, but still it has to be seen carefully. One of the reasons for the fall was Reliance. Now, if you see, it made a high of 3,000 and has corrected and has come and tested its 50 EMA, which is at 2842. So, if this 50 EMA goes, then it will go down further to around 2700 odd levels, where this rally actually started from. So, it will retrace back 100% from the level from which the rally started if it goes there.
ITC, it had it was consolidating for some time, and after that it has made a rectangle. It didn't break that level. It was, if it had broken that 400 level, it would have gone to 370 or 350 level. After the stake sale by BAT, it bounced back and has crossed the 50 and 20 EMA, crossed, but then it reverted back. So these two levels are very important. So if it closes above for this 429 odd levels, which is the 200 EMA, then it will again move into a kind of a bullish trend, and it has to trade above these levels for some time. Next stock is Bharti Airtel. It made a cup and handle and has broken above the 1200 odd level, and it's now trading at 1220 odd level. The business is performing well, and I think there is going to be a hike in the prices of customers after the elections are over, and that is the trigger for this stock. So watch out for this stock. In case it dips to the 20 EMA, that is a place to accumulate this stock. Hero Motocorp, this is again a stock which is looking strong. It broke its 20 EMA and then bounced very quickly from 50 EMA. So, and it has happened twice. So it seems that it is making some kind of a double bottom. So if it comes here again uh, to the 50 EMA, this is a place for the stock to be accumulated for long term. Nifty Bank, it this is what I was talking about. This is a weekly chart. So it has made a lower top, and in case it makes a lower bottom also, then that will signal a change in trend. And though it is on the weekly charts at 20 EMA, but it can easily break this. This is a weaker one as compared to Nifty as such, because Nifty is showing some strength. So watch out for these levels for and these stocks. This is a daily chart. It is on a daily chart. It has taken support at 50 EMA of 46,576. But if it breaks this, it may test the 200 EMA, where it has made double bottom already. So that should provide support. That is around 45,062 levels. So this is in a very vulnerable stage, and it made a doji on Friday. So at exactly 50 EMA. So be very careful with this bank index, and it can break down or take support from here and move up. HDFC Bank is showing some strength, though it reverted from the 20 EMA level and 50 EMA level. So it is right now within that range. If it breaks that 1470, goes above that, then it may test that 1500 level. The vulnerability comes at below 1440. So watch out for these levels for it to take place. There was some FTSE rebalancing, so it had high volumes on Friday, but it didn't move much as per that. So be careful with these levels, and beyond that, beyond 1470 is the level to go long, and below 1440 is the level to go short on this. ICICI Bank made a fresh high of around 1110 odd and then has corrected. So and it's now at 20 at its 20 EMA of 1068. If it takes support here, you can go long. Otherwise, it will test the 50 EMA of 1041. So what out for that? It had gone up on Friday because there was again some FTSE rebalancing here. PSU Bank Index have been showing this for last few weeks. It was overbought with RSI at 80 out. So it has corrected last week. It made a big bearish engulfing candle, and it is likely to go down now from here. Maybe test the 20 EMA, and then it will be whether it takes support or move up, or it had a vertical rise for last few months. So some kind of profit booking is taking place here. One of the major constituents of it, which is correcting, is SBI. It had clear 5 bad days. It corrected from that 780 odd levels. It failed to go to 800 levels, and now it may test that 50 EMA of around 711. If that breaks, then the next level is 670. So be careful with this stock. The stock which has broken down from its top is Bank of Baroda. It has now broken below the 20 EMA, so and 50 EMA. Now after this, the next level is around 239 240, which is 100 EMA. So in case there is a weakness, it can go down further. Nifty PSC index, similar pattern as PSU index, overbought, and then it has corrected. So watch out for this 20 EMA at level at which it should trade or take support, and it has had a vertical rise for last 6 to 8 months, and it was visible in the performance of all its constituents. So among them, BEL, it had gone up to 215 level and has corrected, and now it is below the 50 EMA. So it is looking weak. Till the time it is below 50 EMA, it will be weak. It next support comes to around 176 level. That should be the level to accumulate this stock. Coal India again similarly has broken the 50 EMA, and now it is heading towards to test the 100 EMA at 389 390. So that should be the key level to look at this stock. One of the railways PSU company, RVNL, it had broken the 50 EMA but then bounced from 100 EMA, and now it has gone back. So need to watch this. If it trades above that, then it is positive. Otherwise, it will again test the 100 EMA. So watch out for these levels. Nifty IT index was weak, and it was consolidating between the 20 and 50 EMA in this time. So there is no momentum here, which will depend on next week as per the what the Fed does and what is the commentary of the Fed chairman. Among the IT stocks, LTI Mindtree was weak. It is making a declining trend. The results were weak, and there the stock had a gap down. Now it is trading below its 50 and 200 EMA, and it had, from the declining trend line, it has slightly made a break. So let's see if it can take support on this declining trend line and then test the 200 EMA, though the stock looks very weak. One of the stock which was moving in IT sector with good volumes is Intellect Design. Uh, it has moved up from the 20 EMA in February, and now it is trading very clearly, and it tested the 1200 at level, which was the target, and now it has come down. So if it comes closer to 20 EMA, that should be the level to get into this stock. Now Nifty Energy Index, again it was grossly overbought, and then it had made a big red candle and has now come to, RSI has come to around 69 odd levels, but still it is overbought and it can correct some more. Again, it had a vertical rise, so be careful with this from 2023 onwards. See the vertical rise. So there is a profit booking which is taking place here. One of the constituents here which has done well is Tata Power. Now it has come down to its 50 EMA, taken support there. So watch for this level. This is a good stock. If it comes to 340, this should be an accumulation zone for this stock. Nifty Infra Index, again, it is correcting similarly like these indices, and has come down, and it should again come back to its 20 EMA. It was overbought. Midcap Index, it was weak for last 4-5 weeks, and now it is tested the 220 EMA already. So if it takes support here, then it's okay. Otherwise, it will go and test the 100 and 200 EMA. Small cap index, it broke the 20 EMA, and now it is below that. May test that 50 EMA after this on the weekly chart. It is having made a top in February, and after that it has been declining. Small and mid-cap investors need to be very selective and move out of losers in case of any rally which takes place. And this decline would have has hurt the sentiment and momentum. And those who were doing momentum investing oblique trading will have to be very selective. One of the stock which is weak here is BLS International. Uh, it fell on Wednesday below its 200 EMA. There was a big steep fall, then bounced back with high volumes on Thursday and Friday. So it is now testing the 50 EMA. So if it crosses above, then it again gets into momentum. Otherwise, it will come back and test the bottom again it has made. Now, some of the stocks I will cover today. One of them is Garden Reach Shipbuilders. Its order book as on end December 23 stands at rupees 23,600 crore, comprising P-17A frigates at rupees 12,700 crore, survey vessel large at rupees 1050 crore, anti-submarine warfare shallow water crafts at rupees 5,000 crore, and next generation ocean patrol vehicles at rupees 3380 crore. The current order book will be completed by FY28. So that means there is a revenue visibility till there. Now it is doing around 5,000 to 6,000 crore. So it's a revenue visibility of 3 to 4 years clearly there. Management is also optimistic on securing a sizable chunk of potential orders of next generation corvettes, NGC and P-17V frigates. Management is focusing on several growth vectors at the moment: exports, commercial shipbuilding, and other equipment such as naval guns. In FY24, GRC has delivered one ship of large survey vessel in last quarter, got commissioned in February 24, and has also delivered passenger cum cargo vessel for the government of Guyana in April 23. Company is executing 4 projects for the Indian Navy, which include 3 ships under 17A, 4 SVLs, 4 anti-submarine warfare shallow water craft, and NGOPV. Plans to increase its shipbuilding capacity from 20 warships currently to 24 warships. The physical progress, it is in various stages of physical progress for P-17A, SVL, SW, ASW, SWC, NGOPV, and Government of West Bengal. So all of these are likely to be completed in next 2 to 3 years, up to 2028. So there is going to be a revenue visibility over next 3-4 years, and subsequently it depends on fresh orders. Let's see its financial summary. It did it around 4,000 crore of revenue in FY24, around 1,000 crore per quarter, and net profit is good, around 10%. EPS around 30, 31 for FY24. Next year it may be doing 37 and then 47 over the next time, where the orders start getting finished. So the PE is decent for a FY26 earnings of around 47, 48. It is presently trading at around 15 PE, so there is some value here. The other parameters are decent. If you see the quarterly trend, it's doing around 800 to 900 crore of revenue per quarter, which is gradually improving. So there is a year-on-year growth of around 30%, and EBITDA margins are also improving. Other income is also improving, which is from repairs, and adjusted net profit is moving up to now nearing around 100 crores. So the balance sheet is decent with no debt, and strong balance sheet is there with good reserves and surpluses there, so as to uh, carry on the various works which are already taking place. Let's see the chart. It made a high of around 950 and it corrected from there, has now gone below the 200 EMA and has bounced back, now reached the 200 EMA. So this is right now at accumulation zone, and these are the kind of stocks which should be accumulated. Varun Beverages is the next stock. To sustain the growth momentum, Varun Beverages has adopted a multi-pronged strategy for current year 24, wherein it will focus on enhancing its manufacturing capability to rise 45% over calendar year capacity, 22 capacity, and the capacity for dairy and juices set to triple. This is the place where they find more growth opportunities, that is juices and dairy products as compared to carbonated drinks, and that is why they are focusing on this, bolstering its distribution network. 3.8 million retail outlets in calendar year 23 versus 3 million in calendar year 22. That is around 30 lakhs. From 30 lakhs, it has become 38 lakh retail outlets, and improving its geographical reach domestically as well as internationally. VBL has signed an exclusive agreement to manufacture and package Cheetos in Morocco. In calendar year 23, VBL had commissioned 2 new facilities in Rajasthan and Madhya Pradesh and has further expanded its capacity at 6 existing locations: Pathankot, Kosi, Bharuch, Tirunelveli, Begusarai, and Guwahati for cumulative capex of rupees 1650 crore. VBL is expanding its reach both domestically, increasing its rural penetration, and internationally. Recently acquired 100% equity stake in South African beverage company for rupees 1320 crore in order to explore into untapped market. It is consciously accelerating its activities to tap into food snacking market, which would potentially be a key growth driver for the company in the long run. So if you see the profit and loss account or the income statement, it is showing a revenue growth of 20% is expected over the next 2 to 3 years. It will target the snack food market, where PepsiCo lacks manufacturing facilities all over the world and relies on imports. So now if you see here, along with good growth in revenues, which is going to be 20,000 crore for this year and 24,000 crore for next year and 28,000 crore in calendar year 26, it is going to reduce its debt. That's why the interest and finance charges are going to reduce, which will drive the profit. So the profit growth is expected to be 30% category and 26% in calendar year 26, which will drive the margins. So if you see the EPS is expected to be for calendar year 25 is expected to be around 26 and 33 for calendar year 26. So taking a mean of around 30 at 50 to 60 P, it should trade at 1500 to 1800 value. All other ratios are decent. The debt is likely to improve further, which will improve the ROE, ROC, and ROIC, which are all in 30% now, 30% ROE business. So it generates a lot of profits. Strong revenue trajectory, EBITDA margin trend, EBITDA above 23%, robust earning trajectory, PAT to grow to 20%, healthy ROE around 30%, generating robust cash flows, which is helping them in becoming net debt free by calendar 25. This was basically debt was done for capex. So the volume mix, if you see, is carbonated soft drinks are 73% right now, and 21% and 7% is the non-carbonated beverages and water. While revenue mix is more, so the revenue potential from carbonated soft drinks is much higher as compared to non-carbonated drinks and water. So that is much higher. They incurred capex in calendar year 23-24, where you can see now, and then it is going to decline because that capacity addition has been done. They have increased their capacity by 45% over calendar year 22 for looking after the peak season of calendar year 24. They have increased the Visi coolers which they have installed to roughly 10 lakh Visi coolers in calendar year 23. So there is a constant growth so as to be able to serve more customers and at more points. And they have increased their distribution network to roughly 2,400 primary distributors. Let's see the chart. It had declined from that 1550 levels, then has tested the 50 EMA around 1350 and then bounced from there above that, above 20 EMA. So if it again comes here, that should be a good buying opportunity for this stock for a very long term. Last stock which we are covering today is solar industry. Solar industry was performing very well last week in a weak market. It is because it has received an export order worth 445 crore to be executed over 2 years for products to be used in defense application. It had earlier also received an export order of 994 crore in January 24. Second major defense export order in Q4 of FY24, which has re-rated the stock. Defense order book at rupees 2400 crore with a proportion of export at 60 to 65% as on date. Duration of execution of exports contract is 2 to 3 years. Revenue from defense sector to be almost 18 to 20% of overall FY25 revenues onwards. It was around 5.7% in FY23. So the defense sector revenues are becoming a sizable part of their total revenues and which will improve their EBITDA margins to 25% by FY26. They are likely to win the Pinaka order in the near term. They are foraying into new geographies. Kazakhstan mining, Saudi Arabia construction shall keep the performance of international subsidiaries robust. Investors who are accustomed to seeing solar industries as an explosive company only, which supplies explosives to basically construction and mining companies like Coal India, need to see the company with a fresh view now. Seeing their profit and loss account, net sales and are expected to improve. EBITDA margins, as I was mentioning, is expected to improve over the next 2-3 years, and which will drive their profits much higher. Profits are likely to double over the next 1 or 2 years, and net income is also improving around 60 to 70% over the next 1 or 2 years, which will drive their EPS. So expected EPS for FY25 is 143 and FY26 is 167. So taking around 160 EPS, it can trade easily at around 50 to 55 times. So 8,000 to 9,000 should be a fair value for this stock. Rest all parameters are improving. Profitability ratios, operating ratios, valuations are now becoming decent. Hence, keep this stock on radar. This stock, we as a group bought it at around 3600, and after that it had a vertical rise, and now last few days it has had higher volumes because of this order inflow, and now it is took support at 20 EMA and now has gone to touch that 9,000 levels and then corrected. So Watch out for this stock. Every dip to 20 EMA, right now it is grossly overbought, but every dip nearer to the 20 EMA is a buying opportunity. I have finished. We will take questions now.